I was having a conversation with a friend recently, and he asked me a question. He said, "What relationship does the stock, once the company is listed, what relationship does the stock have with the actual company?" And I said, "Very little." He said, "What's always confused me is the newspapers and the TV shows and reporters always say everything about the company, what the company's doing, and why it's going to go up or why it's going to go down." But he said, "From what I can see, that once a stock is listed on the stock exchange, it has little to do with the actual company." And that's true. Most people look at a company and will buy and sell based on what's called fundamental analysis. Now, it's not that fundamental analysis is wrong, but it's always a delayed analysis technique. It will tell you why something's happened, not what's going to happen. Yeah, fundamental analysis will tell you what has happened and why it has happened, but not what's going to happen. It's a study of the company's financial position, its management, essentially accountant's view or perspective of the company. But it's not predictive. It will tell you the health of the company, but only short term, because we know that even the books sometimes don't tell the truth. The best form of analysis, in my experience over the last 20 years, is to use some form of technical analysis. Now, it doesn't mean that all technical analysis actually works, because again, it's like everything. There's areas within it that work really well, and there's areas where you can waste lots of time. But for most people, all you need to do is have a pencil and a ruler and a price chart of the stock and know how to draw a trend line. Now, if you can do that, I know that you can make more money than most people ever do in the market. In fact, it'll show you exactly when to buy the stock and when to sell it. You'll never get caught in a crash. Of the 3,000 people I taught, every one of them that followed my rules never lost money in this recent crash.